Hello traders, good morning, good evening, how are you today? Happy Wednesday to everyone. Please give me some okay that you can hear me. Wonderful, thank you very much. Costas for the Aussie, and I told you I can't open the link, so it doesn't really help. We will try to go over that here, okay? Alright, so guys, happy Wednesday. Happy non-farm payrolls trading week. Slow moves on some of the pairs, and as I just want to remind you quickly, on such weeks where we know it's going to be most likely tricky, we have to be very selective and go with the very clear, clean setups that have our chances better. As simple as that. Okay, so there are no real changes in our views on none of the pairs. Nothing really changed since yesterday. The only one that I do want you to do, for those of you who are in the investment, this one, the natural gas, we have an investment from the previous report. Today I will publish a new report with new setups that I was analyzing and preparing during this period. So we have the 260 running, so stop loss on break even. Okay, this is the very important first thing to do. And remember, our target we keep open. We will be looking at least to the top of the range, which is approximately 3.5 or so. We will see. So keep the stop loss on break even. This is the quick update. Unless you already have it on break even, then just ignore. Euro pound. We were talking about the buys yesterday. In yesterday's live room, we explained why. Just want quickly to repeat. We had here the trend line that was broken. Basically, the idea was simple. Bullish hidden divergence was forming on the 4-hour chart. On the 1-hour chart, we got two waves down here with a bullish divergence created by these two lows. Okay, that was the entry, and this is exactly where the pair got its 1 to 2 risk reward right here on the very top. That was 127 versus 54. In that case, it was a bit lucky because the top was reached right on the pip of the 1 to 2 risk reward. And look what's going on here, guys. A divergence is developing, right? And the 090 zone that we were hunting and waiting for is almost reached. Now there is divergence. We are with the weekly sell direction, and this is the latest trend line to the downside. Now I have a question for you guys. We want to join weekly direction. How many false breaks we actually require to see on a daily or the 4-hour chart right on the top in order to be able to start looking for the sells? Okay, so once again I want to repeat the question. We are joining the weekly direction, so we are going with the weekly direction. Okay, how many false breaks we actually require to start looking for the sells? Beautiful, thank you very much. One false break is of course the correct answer because we are with the higher time frame direction. One false break is enough. One false break, we got it right here. And then we have the types of the entries we want to deal with. For the very conservative, we of course will want to see that making lower lows first of all, and then sell rallies, right? basically this is the ideal conservative plan. For aggressive, we can go with the candle pattern, with this engulfing, right? It's false breaking psychological level of the short term, the 50 pips psychological level. It's engulfing. It's on a false break. Two candles rule respected here. Here, of course, which makes it valid. So we have the aggressive approach in, and we have the moderate approach in, which means false break and trendline breakout. Conservative, still not in the play. For aggressive and moderate, we are good for sell. And we start looking for sells with this high as invalidation. At this stage, it's only aggressive and moderate approach, but the bearish direction basically is set by the creation of the false break and by the breakout of the trend line. Any questions about these guys? Yes or no? Okay, so basically you see the flow. This is what we call the money flow, right? How it is going from highs, buys, sorry, which we were talking about yesterday, right? With the bullish hidden divergence and a confirmation from 1 hour chart, and of course the fact that daily had nothing against us completed. We reached what we expected, and we got a false break. That's all. Okay. Where is the entry? Entry is based on the way you trade. I can't really answer that because entry is what strategy you use or strategies or okay. So the direction now became, yesterday it was bullish. This is exactly what I show, right? Now after completing the false break and breaking the trend line, we have the bears taking the control for aggressive and moderate approach. Because the best thing for us for conservative is of course false break and lower lows. Then it's much safer, right? But that's all. That's for the euro pound. So we switch bearish, aggressive, and moderate approaches here. That's the first one I wanted to show basically here. So you see how sensitive things could become. Basically, the views could go and change, right? During the same week, within one day. That's what happens when we are dealing with short term. And that's what I wanted you to understand. For those who were buying, you have on the short term, you have to stay connected. You have to stay aware of your position in order to be able to maximize the movement on that. And at the moment that the 4 hour creates the divergence, which means new high, and the 1 hour chart is completing its move with this kind of, well, it's really not on the 1 hour chart, it's more like on the 15 minutes with this triple, right? Completing its divergence by itself, you start to have all the signs that okay, game over, it's running off. Okay, so bottom line, euro pound, we switch now to bearish with this invalidation, which means if we break above that, both directions are in play again. So this is the invalidation for looking for sell setups on the aggressive and the moderate approach. Very simple. Okay, that was the first one, which we discussed yesterday. Dollar franc, Costas, this was your stuff. Dollar franc, we got a breakout here yesterday, discussed about that. Stop loss was kicked on break even. If you move the stop loss to 1-to-1, even if not, you get yourself here, double bottom, bullish divergence. In that case, what you get 2 waves down and a bullish divergence against you. Game over. This or other way around, game is over for the dollar franc. Do we have any new setup to trade with right now? From my point of view, no, not really. And waiting for something clearer to build up. Aussie Kiwi. Now let's discuss about this one. It's really interesting. Aussie Kiwi, we are bullish. Okay, as explained, the double bottom before, we had all the reasons there. No, where is the Fibonacci here? To start looking for the sells. What we were requiring basically there was what? Two waves down, and a trendline breakout. What about this entry? How do you find that, guys? Correct or not correct? If you want me to enlarge about it, here it is. Correct or not correct? What do you think about it? Now this is 1 hour chart entry. In order to get a clear answer, let's see if we have anything against us from the 4 hour chart. Do we have anything against us from the 4 hour chart? Nothing. So, is that correct or not correct? 100% correct. And that's all. But basically, this is the place where it all starts from. And not sure how much you can get or anything like that. We have the movement here of 1-to-1, but even if not, this one cannot work. Cannot profit, sorry. 100% correct setup cannot work. Now comes my second question. What about this setup? Is that correct, yes or no? Risk is too big. Well, can't really argue about that. But let me ask you this question. Will this be a valid stop loss, yes or no? No? Why is it moving? Stay. That's all. Finish. Will that be valid protection, yes or no? This low, I mean, right here. I have yeses, I have no's. Why no? And why yes? Who can help me out here? No breakout of two candles? Of course there is a breakout of two candles. That's why I enlarge it so much. That's the last two candles. And that's where you get yourself the breakout. Right? And of course we had a beautiful divergence there. The red is inner in the green. This one? No, it's not. It's higher high. Here. So the answer is yes, it is correct, of course. And same story. The question is, can we move on such opportunities? My answer is normally. That's exactly where the trades would be hit break even, because the stop losses are small, the moves are pretty big, right? While the stop loss is smaller, and that's all. In such cases, we don't need to fight that. We need to be stable. We got a 1-to-1 or the divergence against us. Move stop loss to break even. So that's all. That's for the Aussie Kiwi. Provided two opportunities. This was the first one. Also made a move of 1-to-1, and couldn't make any more. Same like this, like the second one. If it moves down, we can't profit from that much. And on the same time, we do have to play conservative, because this is non-farm payroll week. So we must apply a conservative trading plan. Okay, well, that's all. Both entries were 100% correct. What will happen from there? Only time will tell. I myself am looking on every two waves, as you know, for the buys, just to join the weekly cycle, as long as this low holds. Currently, this pair is pretty much noisy. potentially even making some kind of range here, and really can't say it's the best setups to enjoy from. 100% correct, but normally these setups have problems to pay profits. That's all. Good. So I wanted to go over that and explain. Now my next question for you guys: pound yen. That was a triple cycle. Up. 1, 2, 3. What we were waiting for? 2 waves down and buys. Very simple. Let me ask you these questions, guys. Is this correct 2 waves? Yes or no? Or is this correct 2 waves? Yes or no? Let's enlarge so you can see the candles and make the decision. Okay. From here to here, is any of the moves is a correct 2 waves? Yes or no? I have yes, I have no. Okay. To answer this question, well, we have the divergence, so no doubts about the divergence, right? So to answer this question, let's take a look on the 2 candles rule. That's the first move down. That's the 2 candles rule. Was not broken. Not valid. This is the second move down, 2 candles rule. Again, not broken. Then we have another candle here. Again, not broken. Therefore, that's not 2 candles rule in the game, which means it's not a valid 2 waves. For 1 pip or for 2 pip, you know, there are rules that you follow, things you validate or invalidate, and that's all. You have to stick with that. You start to bend, you find yourself a rhyme here, okay? But let me ask you this question, guys. Let me ask you this question. A very important question I want to see you answer. The correction down after this triple cycle, right? We had a triple cycle. 1, 2, 3. The correction down could be in what kind of ways? Double cycle down or a range. Thank you very much. A range. Is it a possible range? For a range, we need 2 false breaks. Number 1, number 2. Do we have possibility for a range? Yes or no? Exactly, of course, yes. How do we validate a range? If this leg down, the second leg down, here, right, is a cycle by itself on the lower time frame. This is 1 hour chart. Let's drop down to lower time frames. Is that a valid cycle finished with divergence by itself? Yes or no? It is a cycle by itself. Of course it is. It's a triple cycle, which we can make a double cycle. So we have this one, right? We are very close here to 161. Simply classical. We can't ask for more. So the answer is, of course it is. So this is a possibility for a valid range. In that case, how do we enter such position with the last trend line available on this time frame? What is the last trend line available? Well, technically this is the easiest one to connect, right? With the big divergence, of course. But this one would be correct or not? What do you think? If it's a double bottom and answers the condition for a double bottom with divergence, will that be correct? Yes or no? Of course, yes. Double bottom with a bullish divergence, 100% yes, of course. For double bottom, not lower lows. I'm asking for double bottom. Of course, yes. Will that be correct in that case? Yes. Basically here, all the trend lines that you connect the big trend lines or the small trend line or huge trend line, whatever you connect here, right? Whatever you connect here would be right and pretty much the same angle. In that very example, but it is very correct. So 1 plus 1 normally equals what? Normally equals 2. We have triple cycle up. We confirmed the range. Is this a correct buy that we were waiting for? Yes or no? The answer is again, of course, yes. Where do we put a stop loss? Here, number 1 or number 2? This is our entry, of course. I mean that's where the move is validated. Number 1 or number 2? I have two. I have 1. Thank you, John. I have 2 and 1. I basically all in the same. Now, why 2 is correct? Because it does apply for the rule of 2 candle. These 2 candles were broken, so this is an official low. Number 2 is the correct answer. Okay, in that case they are pretty much on the same place, so of course you can put few more points and protect even the previous low, but from personal experience I can tell in that cases if 2 would be cleared, 1 would be cleared. No, almost on 100% of the cases. That's why I always prefer, when trading the risk reward, when trading pure risk reward, right? Not talking about a long-term swing or pips counting. I'm talking about pure risk reward trading, the statistical trading. I prefer to go with the setups where the stop loss is smaller, because when we ask less from the market, it's easier to hit the take profit. Okay, that's the idea. So that's why I prefer always go with the second one. Always preferring to ask from the market for less, because then it's easier to hit the take profit. And you know this formula, right? Just think about it. Where it's easier to get paid, when you are asking for 50 pips from the market, or when you are asking 100 pips from the market. And here comes your answer. Of course, it's easier to get paid when you are asking for 50 pips. So if you squeeze the entry to the correct place to minimize your risk in pips, you automatically increase your chances to get paid when the move happens, because you are asking less. And that's all. Pound yen. Now pay the 1 to 2 risk reward, and that's all. But you may hit a stop loss with the spikes. Of course you can, but that's my dear friend, in trading it's not about being right. You know that. I am not looking to be right. I am looking to make more profits on the times I am right than on the times I'm wrong. That's all. You could be erased with a spike here, exactly like with the spike here. What will happen? No one knows. No one, not myself and not anyone else in this industry, including the legends like Warren Buffett. You can't know. I keep repeating that a million times. The only thing you can do is to improve your chances. And you improve your chances by these few things you do. By validation of your entry, by asking from the market less. Of course it has to be correct. I'm not saying let's put a stop loss, for example, here. Why? Just because it looks enough. No, that would not be correct. That's not a low. That's not a valid low. Right? That's what I'm saying. But when you go and you put that on valid ones, what will happen? No one knows. This is pure business of statistics. And on the time you are right, you have to make more, and on times you are wrong. That's all. That's all. Will there be a spike? Will not there be a spike? Who knows? All that we have the control over is our starting point. If our starting point is the best point, our chances are increased. Game over. That's what it is. There is no other way. There is no other way. Okay, so pound yen. Valid or not valid? Valid. Explain why. Any questions here about that one, guys? What will happen from here? So where we are going? Are we going higher? Are we going lower? What will happen? Who knows? Who cares? We enjoyed from what we were waiting for. For us, in this very short-term cycle, the job was done. Game over. Who cares about what's going to happen next? Trying to predict what will happen from here? Why? Let's trade facts, right? That's facts. And that's where we trade. We wait for the setup, we squeeze in, we have ourselves the valid entry. That's all. That's the best starting point for us. What will happen from this moment? Who knows? You saw the Aussie Kiwi not moving. The pound yen is moving. That's all. What of them will move? We don't know. We never know. The only thing we have the control over is, as I always say, the validity of the starting point. We have to make sure our starting point is the best, and then our chances to end up in profits asking for 1 to 2 risk reward is much bigger. Is much bigger. That's all. Next one. Aussie versus the franc. We are bullish there. We were looking for the buy setups. We got ourselves this setup here on a bullish hidden divergence. In order to understand if we have anything against us, let's ask ourselves the question. We are going with the daily bullish divergence. And remind you, right? We got a bullish Fallsberg on daily. In that point, right here, do we have any bearish divergence right on this high of the 4-hour chart? No. It's a straight move, no divergence. Therefore, the 1-hour chart bullish hidden is a very valid setup. In order to enjoy from it, we need to confirm that we have a divergence. Bullish divergence on the 15 minutes. Do we have a divergence here, any regular or continuing? The answer is no. What do we have here, guys? What's the kind of this divergence? Exactly, it's a bullish hidden by itself. Beautiful. If on 15 minutes it's also bullish hidden, where do we look for our confirmation? Who can help me out here? Thank you very much. We go lower. Lower is 5. And on the 5 minutes, do we have here a divergence, a valid divergence, yes or no? On that place. With these lows, yes or no? Sorry. Now the question is, do you want to deal with that? Yes, again, yes or no? It means squeezing and squeezing for the very, very, very intraday. My answer, no, I don't. I don't deal with such things. I think it's a waste of time. Yes, the divergence is perfect. Yes, the 15 minutes divergence is perfect. But look at this move. It's one shot down. It's very suspicious and very hard to make money from that. So from my point of view, everything was valid here. Is that tradable? For me, not. I don't deal with such things. I don't think they are correct to work with. I think it's a complete waste of energies to squeeze that low just to force an entry, and that's what I wanted to show you here, guys. Okay? Any questions? Okay, so why it's very important, I want to show you not just where do we have to make the right decision in when yes to trade, also be fair enough with yourself. You see something like that that requires to squeeze very, very, very low. For me, it's called a force a trade, force a position. Does that worth it? I don't think so. I simply don't think so. Okay, guys. So that's all. That's for the OZ versus the franc, which I wanted to show. The view does not change. I am still preferring to go, of course, buys as long as these slow hold. So every 2 waves down, we'll be looking for the buys. That's all. Next one. This one, New Zealandian Canadian, crossing the 094, bringing us to the beautiful place we want to start looking for. Do we have 2 false breaks on the 4-hour chart? The answer is no. Do we have 2 false breaks on the 1-hour chart? Yes or no? Let me write down here point 1, point 2, point 3, point 4. Between point 1 to 2, is this a false break? Yes or no? Yes. Beautiful. Between point 2 to 3, is that a false break? Yes or no? Yes. So do we have 2 false breaks? Yes or no? The answer is yes. We have 2 false breaks. What is the next step? Because this is aggressive trade, right? We are looking to trade against weekly, against daily. So we must get the full confirmation. After 2 false breaks, what we are looking for, guys? Convergence. Thank you very, very, very much. Do we have a convergence, which means lower lows on the chart and the MACD? Do we have it? Perfect. We don't. So do we have a sell reason? Yes or no? The answer is again, no. Not yet. On the chart, you have lower lows? Ken, where? This is your last low between the false breaks. Do you have lower low? Where? This level, was it broken down? Oh, okay. You get confused by this one. Okay. So the answer is no. Okay? Perfect. William, after 3, oh sorry, hold on. Let me put the numbers again. 1, 2, 3, 4. You said after 3, after here, no 2 candles rule. But how is that connected to the false break? If you are looking on a false break between 2 and 3, where the 2 candles should be applied? On 2 or 3? What do you think? On this move or on this move? Exactly, on this move, right? Here, you have your 2 candles applied. No, why both? 3 is your future move. A one that you will want to trade. If you want to trade this move, you have to confirm your previous move validity, so it's valid. Now, for example, if I ask you, is the false break between 3 and 4 valid? 3 and 4. Is this valid? The answer here would be no, that's not valid. And that's why you can't use this low. So your only low for the convergence would be here. Okay, make sense? Between 3 and 4, no, you don't have it. Between 2 and 3, yes, you do have it. And that's where this low is valid, while this low, no. Okay? So we have to break this this low in order to start getting the convergence. Once we do, we want to look for sells. Get ready. It's building up. It will happen soon. How soon? We will see. Maybe this week, maybe the next week after squeezing a bit more. It's warming up. It's building up. Don't rush. Don't rush. Okay? Now I have a question for you guys here. If we don't yet have the reasons for the sells, can we buy this bullish hidden divergence? Who can help me out here? This is a little test for you. So let's see, how do you deal with that live? Can we, if we don't have the reasons to go and actually make a sell, can we go and buy this bullish hidden divergence? Yes or no? Okay, now let me ask you a question. In order to validate a hidden divergence and make sure we have enough room to write a trend, what do we ask ourselves? We go to one higher time frame and we ask ourselves, do we have a divergence against us? So something to prevent from this trade to continue smooth. Let's go to the 4-hour chart. At that very place, do we have on that very place a divergence against us? Yes or no? Yes. Therefore, is that smart to look for buys here? Yes or no? The answer is no. Because on such cases, mainly, that's where we start to deal with zigzags, which we actually do right now. That's exactly where the noise is coming on. The confusion between the time frames. The unsynchronized or non-synchronized, how to say correct, but anyway, you got me. Situation between the time frames. That's where the big money is starting to get out, and this is where only algos on the very, very arbitraging ways dealing with that, with the pairs, with the market. Okay, guys, is that clear? These are the questions you ask yourself. This is how you lead yourself to get the answer for your trading. What's valid, what's not valid. Because it's so easy to fall in love with the position, with the possibility, with the way the chart looks. It's so easy to go and say, okay, I have this trend line broken. Right? Let's go and sell. Stop for a second. Stop for a second and ask yourself this question. Is that valid? That's how you confirm validity. Okay, guys? So wanted to go over that. Ask yourself these questions in order to be able to get yourself a clear answer. Okay? Okay. EuroCAD, still nothing. We have no cells formed. No false, no two false breaks, no divergence, no convergence, sorry, so we don't have anything to deal with that. Anything from other forex pairs that you want me to cover, guys? Yes or no? Euro dollar, there was a request of the euro dollar before. Let's see. Euro dollar is on the top of the range, right? We said we want to go for a sell closer to the top of the range. We are on top of the range. We are developing 4-hour chart divergence, right? 4-hour chart divergence is in play. 1-hour chart, yesterday we didn't have here nothing, so we were waiting for a new high, and we did complete this divergence on the 1-hour chart, on the moving average, not the histogram, on the moving averages. So let me ask you this question: will this be a correct last trend line to trade? Well, we do have the divergence here, right? We do have divergence here on the highs. So do we have this valid trend line, or should the trend line be this? So trend line number 1 or trend line number 2? It doesn't really change much in terms of the entry, of the angle, but I just want to discuss about the validity. What do you think, guys? This one is valid, or the second one? Trend line number 1 or trend line number 2? Second, 4 second. Anyone says first? Yeah, oh, I have the first. I have the first. Okay, in order to be able to answer that, we have to ask ourselves the same question. This is a divergence, yes. Do we have two candles rule in play? On this rally, that's the last 2 candles were not broken, so that's not a valid high. On this rally, that's the last 2 candles not broken, not valid. This is another high that was created, again with the same low, not broken, not valid. Therefore, the second trend line, the bigger trend line, is the correct one. This one that connects the lows. Basically, it has to go through this low, right? But the angle here would not be correct. This low doesn't have a high. So that's why we squeeze it to the last available low. And this is our low, and this is the validity for the short-term sell on the euro dollar, with this as invalidation. Tomorrow we have the ECB, 100% correct. We also have non-farm payrolls on Friday. It's it's correct. It could have the impact. We are not talking here fundamentals, how they could affect, because fundamentals is 50-50. One time with you, one time against you, right? So this is the invalidation for this scenario. Is that okay, guys? You see, how do we wait for the situations and the conditions to form for us, right? Yesterday, that was not ready for the sells, because we did not have another high, we did not have validity for the trend line. Today, after it moved up a bit more, a bit further, it brings it for us and it makes it ready. And this is how it becomes correct. Okay, guys? So euro dollar on the very short term, and still with a bit of aggressive approach, because we're still stuck inside the bigger range. This is the short term. This is the invalidation for the euro dollar. That's all. John, what is it? Invalidation. Well, I like it. I like it. Invalidation it is. Last one of the euros, then we're going to the commodities. Euro Aussie. We were waiting for two false breaks. We got ourselves the first one valid on the very top, and we got ourselves the second one valid right here. Do we have a convergence? Yes or no? In order to start looking for the sells, I mean. Do we have a break of the low? Yes or no? The answer is no, we don't. Therefore, Euro Aussie still unshortable. Right? Still unshortable. We are waiting for the conditions to complete. We are definitely only after sells. As I explained yesterday, I wouldn't really deal with buys at this stage due to all the higher time frames pointing to the same place. I would definitely be looking for sell setups when they are formed. Currently, we do not yet have lower lows, so we do not have yet valid sell. That's why basically this pair is zigzagging. Okay, great. Gold and silver. We broke the trend line here. We are holding above. So as long as this low does hold, we remain bullish. How to join in this situation? Two waves down. Do we have any two waves down here? No, we don't. Right? So we are waiting for clear situation to trade it. Currently, none. Okay. You can say yes, you have yourself a bullish hidden divergence forming. That's right. Need to ask the question: do we have signs against it on the 4-hour chart? The answer would be no, we don't. So the 1-hour chart divergence, hidden divergence, could be in play, right? This one, here, 1, 2, right? That could become on play. And in order to enjoy from that, what we do is we squeeze lower to the lower time frame, and there we must be able to find a divergence by itself and clear two waves down. Do we have any clear two waves down here? Yes or no? Well, technically we have this high, and this high became valid of the last two candles. So this is what we can do right here. Right? So now we will want to see divergence forming. Once the divergence is formed, we can start looking for the breakouts. 1-hour chart bullish hidden, 15 minutes must confirm that. Once it does, if it does, we can start going with the buys on the breakout. Okay, make sense? Silver of course follows. They're moving pretty much the same on that place. Who asked this? Asif, okay, about the gold. Oil, we were bearish here, we remain bearish here, and the oil that provided us this bearish hidden divergence on the 1-hour chart, we discussed about the validity of the setup yesterday. It wasn't really ready. Then we got ourselves another high, and we got ourselves the divergence right here. Oh, that's actually that's a good test. That's a very good test, guys. Look, will this high on the MACD, right? This high be connected correctly to the top of this candle? Yes or no? I mean, where do we connect it? Here or here? First or second? second would be correct. Why? Because we never got any two candles here invalidating it, right? We never got the two candles invalidating it. So the high here could be delayed to the high here on the chart because this is one straight move. There are no two candles correction on the way. This is one straight move, and therefore this high on the MACD could be connected with the high number 2 of the chart. Very good, very good. That's all. Basically, this divergence is not tradable. We don't have nothing to rely on here in terms of entries of this trend line, right? So we can squeeze to this position, but the bigger view that we have becomes valid only. Not we can squeeze lower. This we can't do. No valid two candles. But the first trend line was confirmed by the divergence, which we can squeeze lower. So we only have a confirmation, not an improvement. And this is the only place where the breakout becomes correct. Okay, again, we can squeeze it to here because we don't have valid two candles to call that a tradable condition for the divergence. So this is not an entry for us. Even though, you know, looking back, it looks better, but it's not valid. It's not correct. This is the only place where we got it correct. Now let me ask yourself this. Let me ask you this question, guys. Would this be a valid stop loss, or do we have to protect the original stop loss? Stop loss 1 or stop loss 2? Which one would be correct? One, exactly. Why? Because on the 2 we don't have the 2 candles high broken. Beautiful, perfecto. So that's all. That's just what I wanted to explain about the oil. We were short, we remain short. Our invalidation currently is this high of the bearish hidden divergence. Invalidation for the bearish view, of course. Natural gas holders, I explained at the beginning. Indices. Well, I don't see any setup yet, so I don't see any reason to trade it yet. I was looking for a confirmation of this bearish hidden divergence. Thank you very much, Ken. Have a good day. Thank you very much. This was the bearish hidden divergence on the 4-hour chart. Never got confirmed correctly with the 1-hour chart. Never got it valid. Therefore, the only thing we can do here is the big trend line just for a divergence, finishing, not squeezing lower, and then look what it makes for us. A huge stop loss up to here, sorry. Huge stop loss, 400 plus points on 1-hour chart. Not tradable, at least for now, at this stage. DAX. Oh, DAX is very interesting now. Now we have a new high. Now we have the divergence. This is the trend line that we will want to short right here. It is developing a bearish hidden divergence, 2 waves on the 4-hour chart, and the 1-hour chart confirming us exactly what we expected. DAX, we start to look for the sells. If the risk reward in that place would be normal, this is a good sell. If the risk reward is too big on lower time frames, pull back and improving the entry. This one starts to look very inviting. Okay, and cryptos, this one, the OMG, starts to be ultra interesting. Triple cycle up, double cycle down, 50% is reaching. This is the last trend line building up. We want to see the breakout. We got a breakout, we got the reasons to start looking for the buys. Okay, keep on eye keep the eye on that, sorry, and follow that up. Ripple is improving the next possible breakout at this stage. This is the only trend line value. I believe it will improve as the trend line on lower time frames. Currently, we have nothing to do. And my favorite, that I keep waiting for it, that's the Ethereum versus the Bitcoin. As you know, not a secret, I've been talking about it for a while. So I want to see that squeezing. Currently, the last divergence doesn't really allow to improve nothing. So would really want to see the breakout and on lower time frames get the improvement and trade it. The risk reward that this one could offer on the future run is unbelievable high. Okay, that's the only updates I have for the cryptos. Nothing else created, moving, or providing anything. So that's all, guys. That's the main things we had since yesterday. Euro franc, we need to pay attention to this one because it is right now dancing on the 61.8 Fibonacci retrace. Divergence only starts to pop up on the 4-hour chart. Daily is a bearish hidden. 1-hour chart starts to show some signs. We will want to see if that manages to provide us the sell opportunities soon. Okay, we will want to see trendline breakouts. We will want to see that holding below and giving us the chance to trade. That's all, guys. Keep an eye on all the rest of the pairs we have on the list. The ones I wanted to show you are the ones that basically were moving and providing us some opportunities since yesterday. The rest we are waiting for. Okay, not the directions did not change. What does change are the short-term setups we are dealing with. So that's why I wanted to cover all that for you guys. Go through the things I saw, the things I was collecting to challenge you with, to help you to deal with them better. Keep asking the questions, keep sharing your trades in the Telegram group so me and the other guys can go and answer and help you to make the right decisions with the trades and the conditions you deal with. Thank you very much for being here, guys. I'll see you tomorrow. Quick update. I sent an email yesterday, but just a quick update. On Friday, there will be no live room with Jordan. Instead of that, he's going to discuss about the shrinking divergence principle he is working with. He called it a matryoshka, the Russian matryoshka. That, you know, the big toy going through all the lower toys. He would be explaining that. You would really want to watch that, at least the recording. So I sent an email yesterday with the invitation link. It's open webinar for the entire community, not just nothing special for the live rooms or for the club. So watch that if you can live, so you can ask the question live. If not, make sure to watch the recording. It will be very, very interesting. This I promise. So I wish you a wonderful day, guys. Wonderful evening. Thank you for being here. I'll see you tomorrow, and I'll see you later in the Telegram groups. Bye for now.